Chris Hensley is a registered representative of Cambridge Investment Research, Inc., a broker-dealer member of FINRA SIPC, investment advisor representative of Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Houston First Financial Group are not affiliated.
The Houston Midtown chapter of the Society for Financial Awareness presents Money Matters with your host, Christopher Hensley.
Good morning, everybody. You're listening to Money Matters on KPFT Houston 90.1. I am Chris Hensley. The time is now 11 a.m. and we've got a great show lined up for you today. The average homeowner can pay over $100 a month, which of course is $1,200 a year when it comes to flood insurance. On a 30-year loan, that equates to $36,000. So that's a lot of money. Wouldn't it be great if your flood insurance rate could be reduced? We are going to be speaking today with Brad Hubbard, and he is the author of Flood Money, The Guide to Moving Your Property from the Flood Line. So we're going to kind of do a deep dive, no pun intended, into the idea of flood insurance. Being in Houston and the Gulf Coast region after having Harvey and several hurricanes and storms in the past, this is a very important issue for homeowners in the Gulf Coast and Houston area. So please stay tuned. Keep listening. Brad will be joining us very, very shortly. If you are a longtime listener of the show, you know we always reserve just a few first minutes of the show to kind of tell you what's going on in the financial literacy world in the Houston and the Gulf Coast region. We do have a talk coming up on the 25th of this month at the Youngman Library that's there on Westheimer. It is open to anybody who participates in Optional Retirement Program, which is a state retirement alternative. So for state employees who have the ORP program, we will have a free seminar open on that day where we will talk about ORP. We'll also do kind of a deep dive into Social Security, into Medicare, and some of the ancillary things that come up that we need to have on our retirement radar before we turn off our paycheck and start retirement. Also, now you hear me talk a lot about Houston Money Week, and this comes up each and every year in April. So why am I mentioning it here in August? Well, I did get an email the other day from the leadership team from Houston Money Week, and each and every year as Houston Money Week has gotten bigger and bigger, we've started kind of meeting earlier and earlier to be able to coordinate it, to kind of wrap our arms around it and get it set up for the April next year. So yes, I'm talking about April of 2019, but we are already starting Houston Money Week team leadership meetings in September of 2018 for next year. So keep on the lookout for that. The website for Houston Money Week is www.houstonmoneyweek.org. Of the hundreds of financial institutions, nonprofits, local city governments that participate in Houston Money Week, a lot of the partners will have events that take place throughout the year. So I always kind of direct people back to that website, because even if we're not in April, there's always resources that are available year-round. So just a reminder, check that website, houstonmoneyweek.org. With that, let's go ahead and get Brad on the line so we can maximize our time with him as well. Brad, are you there?
I'm here, Chris.
Excellent. Well, thank you for being on the show today.
No problem at all. I appreciate you having me.
Absolutely. So I always start the show the same way. I will introduce you to the listeners so that they can get to know you just a little bit better. You are the founder and CEO of National Flood Experts, and you've also written the book Flood Money. Your company, you help get commercial and regional residential properties out of flood zones. And if they happen to be zoned incorrectly, this happens a lot in any area that has high flood potential, coastal regions, that's here Houston, cities along rivers, etc. FEMA blankets these areas to make the entire zone require flood insurance, even though some of the properties will likely never be in the danger of flooding. They just have guilt by association with the areas around them. So I know we're going to do a deep dive into this. Once again, Brad, thank you for coming on the show.
Absolutely, and yeah, looking forward to it.
Well, tell me, let's start with the book, Flood Money. Why did you write Flood Money?
Sure. Flood Money I wrote to be just sort of a guide for those do-it-yourself homeowners and business owners to be able to read through it, see why the NFIP was created, the problems that are in the current system, to really evaluate their own property, and then potentially get their property removed from the flood zone on their own. It's really a guide. It's more of a technical manual written by an engineer, unfortunately, than a true novel or a book. But yeah, that's why I wrote it.
So for the lay person who's in Houston, so this is a good example because I kind of went through this process. We purchased a home in December of last year, and it was shortly after the neighborhood had been flooded from Harvey. And so kind of for people who are either purchasing new homes or they have existing homes, what are some of the things that we need to get on our radar when it comes to flood insurance?
Sure. If obviously, with you guys, you had a recent storm, a massive storm, the worst one that's ever hit. But so really, in the Houston area, if you had any flood, if you didn't have any flood issues during Harvey, you need to sort of pay attention to whether or not you're required to carry flood insurance. But the number one tool that any property owner has to really determine what kind of risk they really have, it's an elevation certificate. And that's just a piece of paper that is done by an engineer or a surveyor that tells you exactly the elevation of your home relative to where FEMA thinks it will flood every 100 years.
So by looking at that kind of gives you an idea of where FEMA has drawn the line. Does that sound correct?
That's correct. Yeah, that'll tell you, where FEMA and your local communities think it's going to flood up to and where your home sits, in relation to that. If it's showing that your home is, 3 feet above where they think it's going to flood to, first of all, flood insurance is going to be very cheap. But at the same time, the likelihood of flooding becomes much, much less. But if you're on the opposite side and you're 3 or 4 feet below, this property that you're purchasing or that you're in might be a higher risk than you're, willing to take.
And can you explain that a little bit more as far as the zones? So I know from my experience, there are people that are required to have flood insurance. There's people who are not required, and then there's different levels. Is that based on these zones? Can you tell us a little bit more about that?
Sure. Yeah. The way that it works is basically FEMA, in conjunction with all the different local communities, they try to predict what will happen in major storm events, where the water is going to go. To do that, they use topography and elevation data that they can get from these communities. Sometimes it's very old, sometimes it's more up to date. But in that, they then model what the 100-year storm is going to look like. They plug all that information to a computer system, hit go, and wherever there's water, that creates these flood zones. The special flood hazard area is what it's called. Anyone who owns property inside of those, if they have debt on that property, they're required to carry flood insurance by their lender. So that's where the requirement comes from, is it's on the debt side. It's not like a national law or anything, but if you do have debt on that property, you're required to cover it with flood insurance to protect yourself and the bank at that point. And there are lots of different types of flood zones, but the main two are anything that starts with an A and anything that starts with a V. The A zones are inland areas where they predict that there will be floodwaters. V zones are coastal. The V stands for velocity, so you're talking wave action, things like that. And in there, you're talking about much higher premiums and things of that nature.
So you mentioned the 100-year storm and kind of getting some of these metrics and history for them to make a case that, there's a probability there that you're going to have a storm. You said the different types there, the A type where people are inland, but then there's the velocity where people are more, coastal, and you will see the premiums reflect that. It's going to be much more expensive for something like that.
That's correct.
And the idea that if you have a loan, that it's required if you carry debt on there for depending on where you fall in here, they're going to require you to carry that flood insurance.
Yep, that's all correct.
So tell us a little bit more about some of because you've been able to help people save money on that. What are some of the areas that people should look at to see if that's something that they could do as well?
What we do is, when FEMA takes a look at these maps, they look at the whole area. They're looking at your zip code, at your whole community, your city. We come in and take a look on a property-by-property basis, and even more specifically, the structure on that property. So where FEMA might say that, this entire block is in a flood zone, that's typically using average elevations. So we'll come in and see that, this home right here is actually built up a little bit higher and isn't at risk to be damaged by that 100-year storm. So we go to FEMA at that point and basically petition them and say, hey, this home here, we do not believe that it's going to be affected by the 100-year storm. They come back and say, yep, we agree, this area is still a flood zone, but this structure right here is outside of it. So, we look at it on a very micro basis, where FEMA looks on it on a macro basis. That's the biggest difference in what we do. And, yeah, we've saved our clients, I think we're about $3.5 million in flood premiums so far across the country.
Wow, that's huge.
Yeah.
Well, I know, so nobody wants to be underinsured, or they don't, if there's risk there, they don't want to not be insured. However, they want to make sure that it's based on their specific situation and not an average of, I can tell you kind of my example. The neighborhood that we moved into had been flooded from Harvey. But it turns out that our house was the highest elevation point in the neighborhood. One of the neighbors, when we moved in, he was walking his dog, and he said, during this storm, I had to walk my dog here because it was the only place that was up above the floodwater. Luckily, when we were purchasing the home, my property and casualty agent, he said that this place had probably not been surveyed since the 80s, and that he thought it would be worth to spend $200-300 to get it surveyed, and it turns out that ended up saving us thousands of dollars off of the policy, and so I didn't even know that was a thing.
Yeah, exactly.
Prior to that, so the idea of your book and kind of getting the message out and letting people know that is. What are some of the things that you can do? Let's say it's not a situation. So my situation was where I was purchasing a new home. What if you're in an existing home? Are there any other things that you can do as well?
Sure, absolutely. We basically go through a 10-step process on any home that we're looking at, and the goal is to determine, first, if we think that they should be in a flood zone, if we can get them out, if they should even, if flood insurance is even really necessary. But then after that, what we're trying to do is find ways to make flood insurance cheaper. So you have a home that may or may not have been affected by floods in the past, but there is a risk there, or you have a homeowner or a business owner that is risk averse. What can we do to make that premium as low as possible? And that can be mitigation efforts, whether it's flood proofing, flood venting, utilizing some of the NFIP guidelines with grandfathering, looking into private markets. So we try to basically touch every single thing that we can to get our client in the best possible situation, whether it's with flood insurance, without flood insurance, but to always give them the cheapest possible option when it comes to actually insuring their property.
So I'm a big advocate of the rule of three, and so that's kind of how I went down that process, is that we got a quote from one person that started with the highest policy, and by getting that second and that third quote, the property casualty agent was like, well, I was like, well, what's the difference between these two? He said, well, you need to have it do the certificate again, so that you'll have that third. But what I do, I'm an advocate of checklist, and so the idea that you said that there's a 10-step process, I love that. Some of the things that you said, is it necessary at all? So some houses, they may not even need the flood insurance, but it hasn't been looked at, or there's not been a second set of eyes to come in and tell them that. The idea of, can it be cheaper? Mitigating through that flood proofing and flood venting. I can tell you in my neighborhood, so there are streets that were at the front of here in Houston in the Brays Bayou that were right along Brays Bayou there, that the houses, in order for the insurance to pay the claim, they requested them to actually be raised. And so now the first couple of streets in my neighborhood, there are homes that were ranch-style houses that were built in the 50s that are now 6 or 7 feet off of the ground, and that they made that as a requirement for them to pay the claim out. Is that similar to what you're saying for flood proofing? What are some things that people can do to kind of mitigate and help prevent?
Sure. That, actually raising the house is, technically a mitigation feature. Obviously, it's probably going to be the most expensive one that you can do, but it's also very effective when you're raising a house up 6 feet. Flood proofing it's kind of like hurricane shutters, but for flood, to where you're putting physical barriers at the openings of your home to block the water from getting in. This is typically done in commercial structures for flood insurance purposes, but any homeowner can do it. You can get flood doors that you can, they just pop in just like hurricane shutters, to where the water will come up, but a very small amount will actually leak in there. That's what flood proofing is, and there are other ones, flood venting, that's really only to lower your insurance rates for older homes that have enclosures and things like that underneath it, crawl spaces, things like that were typical, at least in the Tampa area here, more in like the 40s and 50s and earlier than that. Those are some of the different things that you can do, and some of it is to make your rates cheaper, and some of it is to just physically protect your home, so that next time something like this happens, you don't have as much or if any damage.
Absolutely. So flooding is a major concern for Houstonians right now. It has been in the past. It's even more so now after Harvey. We have a medical center hub here, and as we've had two flood events back to back, 1 year and then the second year it hit us again within a 2-year range. It was a huge concern, and so the first time it hit us, we had a lot of issues in the medical center, and so part of the thing that they did to improve that is that they moved. They did a lot of improvements in the medical center, but it kind of moved the problem on down the road.
Sure. Yep.
Physically, so that it backed up into different areas along the Brays Bayou. But I'm going back to some of the things that you mentioned here with flood proofing, that the structures that are very similar to the hurricane shutters. I know now that there are buildings that if we get a flood alert, they'll put these almost like physical dams at the front of the parking garages, because the parking garages actually go underground. Yep. And we had some instances, believe it or not, where people actually drowned in the hospital districts here in the parking garages. And so I think one of the things they did was, one of the things that you mentioned was those flood doors. Yep. That's something that they did here. That we have a neighborhood in Houston called the Heights, that a lot of those were built back in the 40s and 50s, and they have that crawl space. So the flood venting thing that you said, that would be of interest to people who have those kind of houses that are built on cement blocks that have a crawl space underneath them.
Exactly.
But then it's not just about getting the cheaper rate; it's also preventing trying to prevent it from happening.
Yeah, exactly. The floods are going to happen, and making your house as resilient as possible, your structure as resilient as possible, should be a priority for anyone who lives, in an area like yours and an area like mine.
Right. Now in Florida, and you've been doing this for years, can you share with us maybe some of your kind of best case scenarios where you've gone to places and you've seen where they've kind of done it right, and then maybe some of your worst case scenario stories that you might have seen where they didn't?
When you say they, you mean FEMA and flood prices and that side?
Sure.
Okay. Well, most of our work is in Florida because we're based in Florida, and Florida has basically a third of all the flood insurance policies of the entire country. But for single homeowners, there's one area just a little bit east of Tampa where there was a row of about 10 homes, and they were all paying about like $6,000 a year for flood insurance, which just in itself is ridiculous because we're not talking $1 million homes here. These were $150,000, $200,000 homes. We were able to get 3 people on that road who actually contracted us to do the work, all removed from the flood zone. They all kept flood insurance, but instead of paying $6,000 a year, they paid $450 a year. So to each one of those people, you're talking $500 a month that they were saving off of their mortgage payments. So for them, it was absolutely massive. On the commercial side, where we've had a lot of success, is in the multifamily side, where apartment complexes and things like that, where a company has 15, 20 buildings inside of an area that's deemed as a flood zone, they're paying $80,000, $90,000, $100,000 a year for flood insurance, and then we go in and look, and they really should not be inside the flood zone. And the last one that we had about 6 months ago, it was huge. They were paying $220,000 in flood insurance, and we got that down to about $60,000. That was keeping flood on all their buildings, and so everything still had the exact same protection. They just paid a lot less of a rate because it was just zoned incorrectly. With the newer maps that are coming out, like Pinellas County, which is a county here right on the coast here and on the Gulf Coast here in Florida, they have new maps coming out here in the next couple of months, but the preliminary ones are out now, and I've been reviewing them, and they've been using LIDAR and much more sophisticated information. They've actually been using flood claim information for developing flood zones, so more real-world stuff. But those maps look so much better than a lot of the stuff I've seen in the past. It's been really good work. Lisa Foster is the floodplain coordinator in Pinellas County, and she's done a fantastic job getting this all done. It's just a much better product than what we see throughout 99% of the country.
So that's encouraging to hear that you mentioned that some of the newer maps that you've gotten kind of a sneak peek at there, that they're using better data and really looking at it. But in the past, some of these zones, if you didn't have somebody looking at it, you gave the example of the residentials where they were paying $6,000 a year for flood insurance, and you were able to knock it down to about $450 each. Which is huge savings. You can use that for your cash reserve, college funding, anything really, anything other than just giving it away there. And then even in the commercial area where you said that they were, office buildings, several businesses and structures in one area, you're talking $80,000, $90,000, and it just having that second set of eyes to come in and say that the average may not be correct. If you look at where they're at and they're focused, when you talk about this, it really reminds me of, we have Galveston Island here, which is within 45 minutes of Houston, and so it's there are areas that every year the shoreline is receding, and you can actually see houses that are in the water now. But there are other areas that's not the case, and yet they're being charged kind of the same rates, and so that's encouraging. Is that where you see the FEMA maps going, more detailed information, or is that just kind of a local thing there?
I think for a county like Pinellas, where you've got something like 30% of all the properties are inside of a flood zone, it's much more of an issue to a much larger percent of the population, to where they have the money to give a very good and detailed map. Other areas across the country where you may only have 1 or 2% of the properties inside of a flood zone, I don't think we'll ever get that kind of detailed information because it's just not as much of a priority to a large enough demographic to make it work. But it's just like with everything else. Technology is getting better, and it's getting cheaper for them to do, new maps and to get LiDAR technology and things like that give a better topography of the area. So the maps are definitely getting better, especially because you're always comparing it to something that's 20 or 30 years old. I mean, so the flood maps that were just done over here in Palm Beach County, the maps before this were 35 years old. So, I mean, the amount of development and changes that happen in 35 years, anything that you put on a new flood map will be a step in the right direction. But, of course, it all follows money and funding.
So you mentioned that some of the stuff that was based off of actual flood claims versus just kind of what they're predicting or what they think. Tell me a little bit more about that. Is that a big part of it, or how does that work?
Unfortunately, a lot of the information is secret. It's not for public use. But from conversations that I've had, instead of just using old information, old flood data and computer modeling, the counties, the communities have access to where flood claims have happened. It's not public information. You or I can't go and look at flood claim information, but the counties can, and smartly, I think, use that to change the zones. Either there has, this area has been a flood zone for the last 50 years, and there's never been a claim anywhere in here, or some, just very, very minor ones. Let's lower the risk over there. Whereas this area over here has had, 20 homes with multiple losses. We need to increase the risk over here, which is just, it's more of the way that private insurance works. It's a much more logical way to think about it. If you have an area with a lot of car thefts, well, you're going to need to charge more for car insurance in that area because the likelihood of a theft is higher than in this area where they haven't had one in a couple of years. So it's better data, in my opinion.
Well, that's good to hear. I know a lot. That is one of the concerns here locally is with all of the homes that got flooded during Harvey and the storms that that were before that as well. That the rates will just keep going up. So there's a worry there to hear that some of the for people who are just purchasing homes or that some of that data might be based on actual claims as opposed to just the idea that because some of these storms we just didn't expect it to be this bad. It truly was that 100-year storm.
Yeah, I mean, nobody could have predicted that. What happened last year there in Houston, I mean, that's absolutely crazy. But
well, what we're bumping towards the end of the show here, the book, for listeners who are just joining us, and we'll have a link to the book on the podcast notes as well. We're speaking with Brad Hubbard. He is the author of Flood Money, The Guide to Moving Your Property from the Flood Line. As we're closing out kind of our finishing thoughts here, what have I forgot to ask you that you want to make sure that listeners know?
The number one thing that listeners need to know is that just ask questions. Just because your lender, your insurance agent says that you need flood insurance, get a second opinion. Have someone else look at it. Just because FEMA says that you're inside the flood zone, that doesn't necessarily mean that's the case. And there's just so much misinformation out there with flood insurance. Every agent will give you the same price. It doesn't matter where you go, you're going to get the same price. That's only the case when you're dealing with agents that truly, truly know flood insurance, all the tricks, all the different, it's just different than every other type of insurance, and you really need someone who specializes in that because it's the difference between thousands of dollars. I mean, you yourself, you're in an exact scenario of where by asking a second insurance agent, you saved yourself thousands of dollars a year, over the course of a loan. So, I mean, you're talking a lot of real money for a lot of real people, and it's just, just by doing a little bit more due diligence and getting someone who knows what they're talking about to take a look at it.
So, Brad, I know, is there a website if people want to find out more about your book and the organization that they can get in touch with you?
Yeah, absolutely. Our website is nationalfloodexperts.com. and from there you can, you see all about what we're about. You can, get some free resources, some free quizzes in there. You can submit for flood insurance quotes, for flood zone removal opportunities, audits. You can start up a chat with us. That is the number one place to reach us, to find out anything about us, and to see if we can help. That's really why we're here, is to help as many of the 5 million people that are paying flood insurance as we possibly can.
Absolutely. Well, Brad, thank you so much. Great information. Again, for listeners who would like to find out more, we'll have a link to the book on the podcast notes. Brad, have a great weekend.
All right, Chris, I appreciate it.
And you have been listening to KPFT Houston.
Thanks for listening to today's episode of Money Matters Podcast. If you enjoyed the show, visit us on the web at www.moneymatterspodcast.com. Drop us a line on SpeakPipe on the right-hand corner. It will receive any voicemails, questions, thoughts, concerns that you have about the show. In addition to this, we recently launched a Patreon campaign. Click on the Donate Now tab to hit the tip jar and find out what Patreon's campaign is all about.